See, I don't know. The web of shell companies, it's unlikely that the Hindenburg report made it out of thin air. Because this is, I mean, in fact, as I read the Hindenburg report, I went back and checked prior reports in the Indian press. Almost everything in that report is, in a sense, almost in the public domain. Nothing there was something that people say, I'd never heard of that before. There are 6,300 companies in Mauritius. It's a company with $11.5 billion GDP. You're saying, what the heck are 6,300 companies doing in there? This is a place where Indian businesses go, and we can debate that this is moral or ethical, or the Indian government knows this, right? It's been trying to crack down on it. So is it possible that the Adani Group has 38 shell companies in Mauritius? Yes. That part of it. So even if that allegation is right, let's talk about the price manipulation part. This is the part that I don't get. This is not a small company. It's a company with small float, but it's a company whose market cap increased by $100 billion. To do that, you need a lot of trading. So what I was looking for in the report is show me the evidence of trading jumping tenfold. In the last 18 months, the price was going up. Maybe I have some evidence that shows me that the trading volume was 20 times higher than before. I didn't see that evidence. Almost all the evidence is about shell companies that are essentially Adani shells that hold shares in the company. Here's the part of the report that I'm willing to believe. That 75% threshold, that's a listing requirement to be I am willing to believe that Adani has played fast and loose with that rule. This is a control fixation. You know what? You can control a company with 70%, but somehow they feel the urge to almost have complete control of the company. So am I willing to believe that that part of the allegation is true, that they might have been at 76% and they used it, the shell company started? Absolutely. That's not a price manipulation argument. That's a rule-breaking argument. We could talk about what the penalty for that should be. So it's a mix of serious stuff with not so serious stuff, with hearsay is the best way I can describe some of the stuff. Somebody told the group that somebody had told them that there were crooked things going on. This could never be accepted in a court of law. But when you're a short seller, you can talk about guilt by association. And you see that in the report, right? The brother, cousin, somebody else who's done something wrong, and the Adani Group has connections to them. So by guilt by association, it must be the sins of the Adani company too. So as I read the report, there's a lot of bullet points there where I look and say, I'm not sure what that tells me about the company. And I'm not sure that that's uncommon, that is that uncommon with an Indian business to begin with. Now, we can talk about whether that's good or bad, that so many Indian companies follow these practices. But I have a feeling that the Adani Group has been caught in a web of their own making. That desire for control has led them to cut corners on things, and that's now going to come back. And it's already haunting them because a short seller has taken those things and said, this must mean, because the two biggest allegations to me were the price manipulation, which is serious, and the other is that they're manipulating the financials of the underlying companies, make the company look more, their earnings manipulation, that the revenues are being pumped up. And that part I find puzzling, because if they're manipulating earnings, they're doing an awfully bad job of it, because Adani companies are not profitable. Their margins are tiny, they're struggling to make money. So if you're manipulating earnings, I'd have expected you to do a much better job and report 10% margins, not 3.6% margins. It's normal and it's concerning. They're not either or, right? I mean, in a sense, infrastructure companies always borrow a lot of money. And they're at the mercy of the regulators because they often run quasi-utilities. An airport, for instance. You can't give a private company complete power to raise prices, right? Because if you did that, you'd be driving airlines out of gates and, charging customers 3 times more. So the businesses that the Adanis are in are low margin businesses, even in their best days, but they're very, very capital intensive businesses. And for whatever reason, and this is not the Adani's fault, going back 100 years, infrastructure companies have always used a lot of debt. They've used a lot of debt because their view is once we build it, then we'll find a way to keep paying the interest. And you can't just blame the Adanis. Banks lend not based on earnings power or cash flows. They like to lend on big physical assets, right? Look at the real estate business. If you think about cash flows, nobody should be lending on Mumbai real estate. There isn't enough rental income in an expensive piece of real estate property. But you know what? Bankers like to lend on big physical assets. Infrastructure businesses feed on that. So this is, and I don't think you can make that a crime. You can argue that this is a bad risk. You should not be borrowing so much money that your operating income is only 1.4 times your interest expense. There's not much buffer.